Well, good morning, ladies and gentlemen, and welcome to the 2019 Annual General Meeting for ALS Limited. My name is Bruce Phillips and I'm your chairman today. We're also welcoming today our guests attending the AGM via webcast. For those of you who are present in the auditorium this morning, there are a couple of the customary housekeeping matters to attend to. First and foremost, could you please now turn all of your mobile devices to silent mode? And secondly, in the unlikely event of any emergency, please proceed in an orderly manner out the back of the auditorium, down the stairs and out onto the street, but at all times following the directions of the hotel staff. Ladies and gentlemen, I am advised that a quorum of members is present. I therefore declare the meeting legally constituted and open. Before we get on to the formal proceedings of today, I'd like to introduce to you the participants in the annual general meeting this morning. First of all, our directors. On my far right at the end of the table will be a new face for all of you, Mr. Siddhartha Kadia. Siddhartha joined the board in January of this year. You'll hear more from him a little later up when he's up for election. But Siddhartha is an independent non-executive director and he is a member of our Sustainability Committee. On Siddhartha's left is Ms. Tonianne Dwyer. Tonianne is also an independent non-executive director. She is chair of our People Committee and a member of the Sustainability Committee. Next in line is Mr. Charlie Sartain, independent non-executive director. Charlie is the chairman of our Sustainability Committee and he is also a member of the Audit and Risk Committee. To Charlie's left is Mr. John Mulcahy. John is an independent non-executive director and a member of the People Committee. On my immediate right here is Mr. Grant Murdoch. Grant is independent non-executive director and he is chair of our hardworking Audit, Governance and Risk Committee. And then immediately on my left is our CEO and Managing Director, Mr. Raj Naran. And at the far end of the table we have Mr. Mel Bridges. Mel is retiring from the board today at the close of business and we'll have more to say about that in a little while. But Mel acts as a non-executive independent director and he is a member of both the Audit and Risk and the Sustainability Committees. And then we have Mr. Michael Pearson, our Company Secretary and General Counsel, in between Raj and Mel. Also present today in the front row we have our CFO, Mr. Luis Damasceno. We also greet our Mr. Scott Goose, representing our external auditors, KPMG, and Mr. Gary Goldman, here on behalf of our legal advisors, Minter Ellison. Ladies and gentlemen, as the notice of meeting has been sent out to all shareholders, unless there are any objections, I'll take it as read. Thank goodness there are no objections. It's a long document. So that's good. Let the record show there were no objections. I'd now like to proceed to explain the format of today's meeting to you. First, I'll have my chairman's address. That'll be followed by a far more impressive presentation by our CEO, Raj Naran. We'll then proceed to consideration of the formal resolutions outlined in the notice of meeting. Shareholders will be given the opportunity to ask questions on each resolution before they are put to a vote. And please note that during consideration of the financial statements and reports, shareholders are given the opportunity to ask questions of a general nature if they have not been asked under earlier resolutions. So firstly, to my address. Ladies and gentlemen, I am delighted to report another very good year for ALS. Compared to the 2018 result, management has delivered an increase in underlying net profit after tax, EPS, earnings per share, and dividends in excess of 25%. This was achieved against a background of our best ever year on safety performance. Also, continued capital investment in our future growth and significant progress on the cultural and strategic initiatives in our aspirational journey to become a top-tier global testing, inspection and certification company. We continue to aspire to be a company valued by our customers, admired by the communities in which we operate, and a company that our employees and our shareholders are proud of. Our long-term strategy continues to be based on the integrity of our work and the delivery of service excellence. These values are what the ALS brand stands for, because they are essential to our business purpose of assuring the communities in which we operate. During financial year 2019, the TIC industry experienced uncertain and volatile global markets. Despite these challenges, the year saw another strong performance from our continuing operations and demonstrated that ALS remains on track to achieve the Everest goals outlined in its 5-year strategic plan. The board is particularly pleased that total shareholder returns, including dividends, was an impressive 88% over the last 3 years. Now I'd like to give you a few more details of the past year's financial results. Revenue from continuing operations was $1.66 billion, up 15.1% on the $1.44 billion recorded in the previous year. The company achieved an underlying net profit after tax from continuing operations of $181 million. This was 27.3% higher than the previous year. The statutory result was a net profit after tax of $153.8 million. Importantly, underlying earnings per share growth was 31.1%. These outcomes were in large part due to the continued improvement in market conditions for those ALS business streams exposed to minerals commodity markets, but also successful expansion in our less cyclical life science business division via acquisitions in the food and pharmaceutical sectors in mainland Europe and the Americas. The underlying profit excluded those oil and gas operations which were held for sale, restructuring and other one-off items, amortisation of acquired intangibles and impairment charges. The company saw a minor increase in debt during the year, but the group remains committed to its strategy of maintaining a strong balance sheet throughout economic and commodity cycles. The group's leverage ratio was 1.8 times net debt over underlying EBITDA at year end, up marginally from 1.7 times last year. The final dividend of 11.5 cents per share, franked to 35%, was paid earlier this month on the 1st of July. This brought the total dividend to the year for 22.5 cents per share, representing a 32.4% increase from the previous year. The full year dividend was a payout of 60% of underlying net profit after tax. This was consistent with our stated policy to pay out approximately 50 to 60% of underlying NPAT and paying out all franking credits in the year they become available. The company's dividend reinvestment plan remains suspended during the ongoing operation of the share buyback. In April, the company announced a new issue of long-term senior notes, extending the group's weighted average debt profile to 5.1 years at a weighted average interest rate of 4%. The strength of our balance sheet provides flexibility for investment in future growth, both organically and via acquisitions in our current target sectors, food and pharmaceuticals. During the year, our balance sheet strength also allowed the company to conduct a share buyback program in which over $153 million has been used to repurchase in excess of 21.8 million shares at an average price of $7.04 per share. This improves our earnings per share and dividend performance with obvious flow-on benefits for shareholders. During the financial year, the company was successful in improving its underlying EBITDA margin from continuing operations by 160 basis points to 20.9%, suggesting ALS is performing at the highest level amongst its global peer TIC companies. All business streams contributed positive operating results, particularly the Geochem and Life Sciences businesses, with experienced better operating conditions and margin improvement. However, the industrial division was adversely impacted by competitive pressures, leading to margin decline despite increasing top-line revenue. Directors are satisfied with the overall performance of the business compared to our global peers, particularly over the last 3 years, the continued internationalisation of the business through consolidation of our operational hub in the USA, and the global diversification of the board and senior executive team has ALS on target to implement its strategic objectives and strengthen its presence as a leading provider of services in the global TIC sector. Raj Naran, our CEO, will outline actions we're taking to address these areas in the current financial year. Turning now to acquisitions and divestments. The strategy around the company's M&A activity remains unchanged, with a focus on building and expanding our highly successful existing businesses with an emphasis on high-margin business streams with testing at their core. The company continually conducts due diligence on a range of small to medium-sized acquisitions, with the current emphasis being on the food and pharma sectors. The company will continue to develop the depth, business stream breadth and geographic location of its pipeline of opportunities. These opportunities undergo very rigorous investigation by management and the board, and external advisors assisting where appropriate. The board's focus is on adherence to a range of strict strategic, operational and financial criteria. In April, the company completed the sale of its environmental testing business in China to Suez. This followed the divestment in March of a much smaller life science consumer testing business based in Hong Kong and mainland China. These divestment decisions were made given the small size of each of those businesses relative to the market in which they operated, and the belief that the company's capital was more efficiently allocated by investing to align with expansion in the food and pharma sectors in Asia, Europe and the Americas. As previously announced, the group divested the majority of its oil and gas technical services business in July 2017. And in March 2018, we announced we decided to exit the small remaining laboratory services component of that sector. In light of the continuous challenges faced by the business and the lack of potential buyers with attractive offers, the board decided to close that operation altogether. Ladies and gentlemen, people and culture are central to ALS's success. With over 15,000 people employed globally in the group, we continue to focus on safety, diverse and innovative thinking, and employee engagement to attract and retain talented employees. Over the last 12 months, the board has placed a greater emphasis on training and personnel development to maximise the potential of our workforce. We are investing in world-leading financial and human resources systems to facilitate quicker and better business decisions. There is an increasing emphasis on sustainability practices to drive our employees' sense of purpose, and we are empowering our employees to achieve their best by decentralising control and allocating capital for their regional growth aspirations. ALS has one of the most diverse and innovative workforces in the world, but more can and will be done. We are pleased to report that further progress has been made on increasing the representation of women in our senior leadership pipelines, with female recruitment in our professional ranks again exceeding 55% in financial year 2019. However, our overall goal is not just focused on gender diversity. The best global companies have great diversity of capability and thinking throughout their organisations. At ALS, our objective is similarly a merit-based and diverse workforce at all levels of the organisation, including the board. In January, we welcomed our first internationally based non-executive director, Mr. Siddhartha Kadia, to the ALS board. In the short period of time since Siddhartha's appointment, the board has benefited from his diverse international, operational and industry experience. This was the first step in a longer-term plan to achieve even greater diversity of thinking at the board level in terms of business experience, gender, ethnicity and geographic background. Over the last 2 years, the board has also invested considerable time and effort to ensure ALS's corporate culture is well understood by its employees. This was not driven by any external factors, but because the board believes it is just the right thing to do. Non-executive directors have now collectively visited each of the company's regional hubs over the 5 continents of our operations to listen to the views of our employees and outline the board's expectation on our corporate culture and our strong alignment with the management team on the strategic direction of the company. ALS is dedicated to operating in a responsible and sustainable manner. This is the 3rd year we have published a comprehensive sustainability report. It sets out our commitment and progress in the areas of safety, environment, community, our customers and our people, and the measures we have undertaken to maintain a sustainable business. I encourage all of our stakeholders to read the report and share our vision for ALS's sustainable future. In the meantime, I'd just like to highlight some of the achievements for the year. Apart from the record safety performance and major advances in gender diversity already mentioned, ALS has spent over $760 million in local communities and suppliers where we operate. We've reduced our energy intensity by 4%. We've paid $50 million in taxes. We've created an additional 1,400 employment positions. We've ran over 53,000 training and code of conduct sessions and attained excellent employee scores in culture and safety. We established the framework and piloted in Australia the ALS Cares initiative. We continued donations to charities that match ALS values, and we entered new strategic alliances with research organisation. And Raj will have more to say on sustainability in his presentation. Turning now to remuneration, the company's remuneration report sets out what the board believes is a balanced and measured set of remuneration outcomes that align with the culture, strategy and performance of the company and the role and contribution of our executives. The improved corporate performance, both in absolute terms and relative to our industry peers, resulted in increases in overall remuneration earned by the key management personnel in financial year 2019. Short-term incentive payments have varied across the KMPs in accordance with the varied divisional performance, suggesting that the STI scheme is working in line with shareholder interests. For the executive's long-term incentive plan, relevant performance hurdles for the 3-year period ended March this year were substantially met, but at the proportionate rate of 85% of the maximum potential. Management has been rewarded, but again, only when aligned with the shareholders' interest. Non-executive directors' overall fee pool increased by $150,000 during the year, following approval by resolution of shareholders at the 2018 AGM. It is important to note that in 2019, though, payments to non-executive directors were 20% below the cap approved by shareholders. The increase of the cap was put in place to provide strategic flexibility in succession planning for the board. It allows for overlapping terms of the non-executive directors and the future appointment of more globally diverse board members, as previously foreshadowed. Resolutions will be proposed later in this meeting, seeking your support for the elections of Tonianne Dwyer and Siddhartha Kadia as non-executive directors for a further 3-year term. Tonianne and Siddhartha have the strong support of the board for re-election, and we hope that they have your support as well. At this point, I would also like to recognise the significant contribution to ALS of our retiring Non-Executive Director, Mel Bridges. Mel has been a director of the company since 2009 and has been a board champion for ALS's move into and the growth of our life sciences division. On behalf of the board, Mel, and the shareholders, I thank you for your wise counsel and your custodianship over your 10-year tenure. Past practice has been for ALS to provide a half-year guidance at the annual general meeting, and whilst it's always difficult to predict future market conditions, particularly in the world today, that's still our intention today. We are currently seeing positive returns and growth in our environmental, food, pharma and tribology businesses, but we're seeing some softness in our sample intake in commodities. The asset care business unit margins remain flat and conditions there are challenging. The board expects first half underlying net profit after tax from continuing operations to be in the range of $90 to $95 million in the first half to September 2019. For the half-year results, the company will also report a profit of $60 million on the sale of its China businesses and a potential tax liability of $18 million relating to historical restructuring activities. This guidance, of course, assumes no material change in market activity levels, foreign exchange rates, and no material adverse events in the group's business activities. Finally, ladies and gentlemen, I'd like to thank all of you, our shareholders, for your ongoing support, to Raj and his management team for their hard work and dedication in carrying out the strategies in a challenging environment, and to my fellow directors on the board for their support over the last year. I'll now hand over to Raj to deliver his address to you. Thank you.
Good morning. Thank you to our Chairman of the Board, Bruce Phillips, the directors, and to all the shareholders, investors, and staff in attendance today. In 2019, ALS continued its journey of implementing its 5-year strategic plan with a dedicated focus on doing what we do best, a global testing services company of the highest quality and integrity. This focus has been and continues to be driven by the ALS management team. Testing is our core business, and it is what we do best. The financial performance in FY19 was positive for ALS and shareholders, despite uncertain and volatile macroeconomic conditions. The results saw all segments of the business contribute positive organic growth while remaining disciplined with cost initiatives. I am particularly pleased to report that the life sciences and commodities business streams have delivered a tangible and material improvement in their revenue and profit margins. Life sciences delivered a total revenue growth of 13% and improved margin by 110 basis points from 14% last year to 15% this year. Industrial division revenue was up 10%, driven by successful business development efforts focused on maintenance-related services. However, margins declined due to a change in mix of services and pricing pressure, particularly in Australia. We have been and will continue to focus on bolt-on opportunities in the food and pharmaceutical sectors globally. We have been evaluating and investing in growth projects, including greenfield operations, innovation, and capital investment across all business streams. The company exited the remaining laboratory services component of the oil and gas business. In April, we completed the sale of the environmental testing business in China to Suez. We also divested the smaller life sciences consumer testing business based in Hong Kong and mainland China in March. Specific details of the individual business streams in the last year financial are well documented in the financial year releases announced on the ASX in May and are included in the annual report released in mid-June. I do not intend to reiterate the details, but I'm happy to answer any questions about specific matters during question time later in the meeting. I do want to focus on some areas that have been of interest to our shareholders and investors following the release of the financial year results. I would like to provide some color around our performance and what we are seeing at a corporate level, in life sciences, the geochemistry, and other commodity businesses. Firstly, at a corporate level, in FY19, we are disciplined in our cost control while investing in key parts of the business. Looking ahead in FY20, recent changes to tax rules and movement in the Australian dollar have created some headwinds that will impact the business on a full-year basis. Moving on to the commodities business. The performance of the geochemistry business was a highlight, with sample flows 7% higher than in FY18. This translated into a 31% improvement in underlying contribution at a margin of 30%. This was tempered to some extent by a slowing of sample volumes in the second half of FY19, particularly in the final quarter. While long-term drivers for commodities remain strong, the continued absence of exploration investment and equity raisings in the sector has impacted global sample volumes when compared to the previous year. This trend has continued into our current fiscal year, with sample flows in the first quarter being consistent with what we saw in the fourth quarter of FY19. However, we continue to build on our global market leadership position and manage underlying margins. Long-term drivers for commodities remain strong. This has led to growth in our metallurgy, coal, commodities inspection business, which have collectively increased revenue contribution to our commodities segment. In 2019, ALS started to deliver on its challenge to ensure that our non-cyclical business, Life Sciences division, outperforms expectation. The division has done this during FY19, with revenue increased by 13% and 8% organic growth across all geographies. Most notably, the business improved its margin by 110 basis points to 15% in FY19, and we have seen further margin expansion in early FY20. This improvement was the direct result of continued focus on the implementation of initiatives around cost management, rationalization, and the introduction of new technologies. We expect both revenue growth and margin expansion in life sciences to continue in the rest of this fiscal year. There is more work to be done and more successes to be achieved in life sciences. We expect continued improvement in the profitability of the Americas due to recent contract wins and organic operational efficiencies, which should continue to come through this fiscal year. This, combined with our continued investment in M&A opportunities in the food and pharmaceutical sector, underpins our ability to provide sustained and improved performance and in the profitability of the life sciences for our shareholders for future reporting period. This year saw the further development and refinement on our focus on innovation and technology. During the year, ALS further entrenched its commitment in this area, commencing beta testing projects in artificial intelligence across all divisions. We also expanded investment in robotics and automation, data analytics, the Internet of Things, and development of global software platforms. Moving forward, ALS will continue its investment in new technologies and global systems to support the ongoing growth of the business. I am proud of the progress that ALS is making in sustainability, not only in managing our impact on the environment and communities in which we operate, but also in the cost efficiencies that these initiatives have delivered to the group. This year was the third year that ALS released a very comprehensive and informative sustainability report, which I encourage you all to read. We have copies here for those who would like one. The report provides an in-depth and practical examples of the efforts being made on a global basis to improve the way we work and to lessen the negative impact that the business has on the environment and community. I commend ALS staff around the globe for their efforts in this regard. To me personally, our commitment to sustainability reflects the true culture of ALS. I encourage our clients, shareholders, and investors to join us as we strive to keep making progress in this area in future years. As a company, we have prided ourselves on our dedication to the values of quality, integrity, reliability, and innovation. These values ensure that we deliver the highest level of client service. We value efficiency, safety, and diversity in our workplaces. We also value leadership and learning that develops our people and our businesses. And we value sustainability and social responsibility. Safety continues to be the highest priority, with an emphasis on a safe working environment for our employees and clients. As CEO, I feel very strongly that our safety initiatives continue to be optimized and enforced, and I'm proud that the business achieved its best ever safety result on record. In summary, it is worthwhile to remind everyone of the strategic roadmap that we are on. This year, we revised our purpose to include the core fundamentals of our business: science, service, assurance. Our purpose provides the drive, desire, and enthusiasm for all ALS employees globally to achieve the Everest goals that we have set ourselves. When I began as CEO and Managing Director 2 years ago, I renewed our focus as a testing company with testing at the center of everything we do. We embarked on a 5-year strategic plan focused on this core competency to achieve the right balance in our portfolio. By 2022, we want our non-resource business to account for more than 50% of the group's operating profit. We are well on our way on this journey, with our Life Sciences division growing in revenue, EBIT, and margin. This is continued with the continued strong performance in our commodities business as cost and technology initiatives drive efficiency throughout the cycle. We plan to achieve this 5-year strategy through existing market share growth, the acquisition of new business streams, geographic expansion, and strategic business development. At this time, I think it's essential to restate the business philosophy under my leadership. These are the same as I mentioned at last year's AGM. We commit to provide a safe and productive workplace for our employees. We must provide high quality and timely data to our clients. We must have a sense of urgency in everything we do. We must keep our business model simple and client service focused. And finally, we need to provide a solid return to our shareholders. None of this would be possible without our over 15,000 dedicated staff and management team at our 350 locations around the world. I would like to thank them all for their hard work and dedication. I would also like to express my appreciation to the Board of Directors for their mentorship, guidance, and leadership, and to my family for their continued commitment and support. Finally, I would like to thank you, our shareholders, for your continued support and loyalty. The entire ALS team is dedicated to building long-term value for you and our other stakeholders. On behalf of management, I would also like to thank Mel Bridges for his valuable contribution as a director to the growth of ALS over the last 10 years. Thank you, Mel. Thank you. Thank you. I will now hand back the meeting back to our chairman to conduct the formalities of the meeting. Thank you.
Well, ladies and gentlemen, we now move to the formal business of the meeting. Each resolution will be voted on by poll in turn. The persons entitled to vote on this poll are all those shareholders, representatives and attorneys of shareholders and proxy holders who hold blue admission cards. On the reverse of your blue admission card is your voting paper, which details resolutions 1 to 5 being put to the poll. If you require any assistance, members of Boardroom Registry Services are here to assist you. Please raise your hand at any time and if you require any assistance during the voting process. Proxies have been received from 572 shareholders representing over 307 million ordinary voting shares, being 64% of ALS's issued share capital. So I think that's a record turnout for the company. Prior to voting on each resolution, the proxy votes for that resolution will be shown on the screen behind me. I propose to vote all available open proxies given to the chairman of the meeting in favour of all resolutions put to the meeting. Results of the polls will not be available until after the close of the meeting and will be announced on the ASX and posted on the company's website. I appoint our statutory auditor, KPMG, as scrutineer to oversee the poll voting process. If you need to leave before the close of the meeting, please complete your blue voting card and give it to a registry representative as you exit the meeting. In that event, I now declare the poll open for voting on all resolutions. The first resolution for voting is the re-election of directors. In accordance with the company's constitution and ASX listing rules, an election of directors is required each year. Tonianne Dwyer and Siddhartha Kadia are seeking re-election and election respectively as non-executive directors at this meeting. Tonianne and Siddhartha's respective profiles have been outlined in the notice of meeting and in the company's report. Resolution 1, the election of Tonianne Dwyer. Tonianne was elected to the board as a non-executive director in 2016. She retires in accordance with the company's constitution and, being eligible, offers herself for re-election. Tonianne is currently chair of the People Committee and a member of the Sustainability Committee. The board strongly supports Tonianne's re-election. I now invite Tonianne to address shareholders regarding her candidacy.
Thank you, Bruce, and good morning, ladies and gentlemen. It's a pleasure to be here and to offer myself for re-election as an independent, non-executive director of your company. Since joining the ALS board in April 2016, I've sought to apply my commercial and governance experience to add value to your company and contribute to its ongoing success. My international executive experience in finance, global mergers and acquisitions, capital markets and strategy has enabled me to contribute to our discussions on a wide range of matters, ranging from our capital management policies to acquisition and divestment proposals. My other board roles expose me to different perspectives on the range of issues confronting boards at present and enable me to contribute to our board governance. In addition to our board and committee meetings, I have visited many of our life sciences, geochemistry and tribology sites, both here and internationally. Last year, as a board, we visited Houston, and Charlie Sartain and I went on to visit labs in Santiago and Lima en route back to Australia. These visits are very valuable to us as non-executive directors. Not only do they join the dots of our global network, they build our confidence in the quality of the management of each of our businesses and give us the opportunity to hear at first hand the challenges and opportunities available in different markets and to different businesses. They are also very much appreciated by local management. Having worked overseas for 23 years, I have a good appreciation of the impact of cultural differences, so I found these visits particularly useful in enabling me to get a better understanding of the consistency of our customer proposition in different markets. Since joining the board, I've been a member of the Sustainability Committee and the People Committee, and earlier this year I took over as chair of the People Committee. We have a strong remuneration framework at ALS, which is well respected by our shareholders. As chair of that committee, I'll continue to work hard to ensure that the remuneration outcomes are aligned with shareholder outcomes. By way of background, I qualified as a lawyer in Western Australia before spending my entire executive career in London in investment banking and in property. My 17 years of advising boards on M&A transactions, refinancings, restructurings and other corporate activity, both in the UK and Europe, equipped me well for the role of a non-executive director. During that time, I saw most of the opportunities and challenges that companies encounter, providing me with a rich reservoir of experience to draw on as required. Since returning to Australia in 2010, I've applied this experience to assist a variety of organisations. I'm a member of the board of the Dexus Property Group, of Metcash, which is the wholesale supplier to the IGA and Mitre 10 networks, and of Oz Minerals, which mines copper in South Australia and Brazil. I also sit on the board of the Queensland Treasury Corporation, and I'm a Senator and Deputy Chancellor of the University of Queensland. I believe my wide experience as a director, my financial skills, and my international M&A and capital markets experience bring a valuable perspective to our ALS board discussions. I look forward to continuing to represent your interests, and I'm grateful for your support for my re-election. Thank you.
Thank you, Tonianne. Details of proxies received for the resolution to re-elect Tonianne Dwyer are up on the screen now. Of the proxies received, about 99.7% are for the resolution and only 0.3% against. Are there any questions or discussions on this resolution? No? Thank you. So, please raise your blue or green card now. You haven't done that, so thank you for proceeding so quickly. I now put that resolution to the meeting that Tonianne Dwyer, a non-executive director retiring in accordance with clause 63.4 of the company's constitution, who offers herself for re-election and being eligible for election, be re-elected as a non-executive director of the company. Please now complete your blue voting card to vote on Resolution 1. As advised earlier, the poll voting cards will be collected once the formal business of the meeting has been completed. Resolution 2, I now move to discussion and voting on the election of Siddhartha Kadia. Siddhartha was appointed to the board as a non-executive director in January 2019. He retires in accordance with the company's constitution and, being eligible, offers himself for election. Siddhartha is a member of the Sustainability Committee and the board strongly supports his election. I now invite Siddhartha to address shareholders regarding his candidacy.
Thank you, Mr. Chairman. Good morning, everyone. I'm pleased to offer myself as a candidate for re-election to be an independent non-executive director of ALS. I'd like to just describe how my life's passions actually connect with what ALS's mission is, and briefly tell you about what I have observed in the last 7 months with the board and the management team. I've been fortunate to have had an onboarding experience that included many site visits, discussions with employees and management team members, as well as understanding how ALS conducts its business. It reminded me of many experiences I've had myself. By way of background, I'm actually a PhD scientist from 25 years ago, and then ended up actually in a business world and had held positions at McKinsey & Company, which is a consulting business, advising boards and CEOs of large multinational corporations. throughout my life, my work has taken me to live into different places. As you can see, I'm originally from India, but I've also spent time living in China, living in Japan, living in North America for most of my life in the last 25 years, and also working and living in Europe. Prior to joining ALS's board, I was the chief executive officer of the largest private testing company in North America and was involved in the transaction of that company to one of the largest competitors of ALS. I'm very eager to contribute to ALS, both to its board of directors, to its management team, and work for the shareholders to make ALS more globally diversified business that is truly focused on the 21st century testing business solutions. Thank you for your consideration.
Thank you, Siddhartha. Details of the proxies received for the resolution to elect Siddhartha Kadia are up on the screen. Of the proxies received, approximately 98.2% are for the resolution and 1.8% against. Are there any questions or discussion on the resolution? If so, please raise your blue or green card now. No, thank you. I now put the resolution to the meeting that Siddhartha Kadia, who was appointed to the board since the last annual general meeting of the company and who ceases to hold office in accordance with clause 61.2 of the company's constitution and being eligible, be elected as a non-executive director of the company. Please now fill out your blue voting card to vote on resolution 2. Okay. We move to resolution 3, the adoption of the 2019 remuneration report. This resolution will be decided in accordance with section 250R of the Corporations Act. It should be noted that a vote on this resolution is advisory only and does not bind the directors of the company. The board aims to set remuneration for all key management personnel at levels which are reasonable and designed to attract and retain appropriately qualified people in a competitive global market and not just the Australian employment market. In addition, the aim is to provide both incentive and reward for executives and to align a significant portion of the executive reward to growth in shareholder value with a view to both the short and long term. The reward structure for the Managing Director and other key management personnel of the group are outlined in detail in the annual report. The structure encompasses 3 main elements. Firstly, a fixed salary. Secondly, a short-term incentive over 1 year, which is cash-based but includes a deferred equity component if outperformance stretch targets are reached. And thirdly, a long-term incentive over 3 years, which is predominantly equity-based. The directors believe the pay outcomes for the 2019 financial year demonstrated that the remuneration policies are working to ensure there is a correlation between company performance and shareholder outcomes. Details of the proxies received for this resolution are up on the screen. Of the proxies received, approximately 98.2% are for the resolution, 1.8% against the resolution. If there are any questions on the resolution, please raise your blue or green card now. We have a question in the middle here, please. When the microphone arrives, could please state your name and speak as clearly as you can in the microphone, please.
Thank you, Mr. Chairman. Ron Cullen, shareholder. You've spoken very positively of your attitude and success this year, but I notice there are a few statements, a few parts in your 10-year summary that give me some concern. I can quite understand why you had to move into new business with the deterioration in the oil and gas business, but in a company of this age, you would expect to find a considerable amount of retained earnings. But when we look there, we find that the equity of the company is over 200 million less than the shareholders have put into the company. That is a concern. When we look at the earnings or the retained company, it's the asset backing is a fraction of what it was. And that too is a concern. And the debt is the highest it has been for 4 years. I hope that perhaps this year you will do something to remedy those points.
Okay, thank you very much for that, Mr. Cullen. I guess there were mainly comments rather than a question there, but we note what you're saying. Yeah, there is a lot of goodwill on the balance sheet, and that's about future earnings, of course. You're talking about a 10-year summary, and we acknowledge the 10-year performance in terms of retained earnings and equity that shareholders have put in. But the equity that shareholders have put in is about also returning future returns as well, that hopefully will go on. And I hope that you would acknowledge as well that the last couple of years have seen terrific performance from the company in terms of underlying net profit increases, earnings per share increases, and dividends to shareholders increases of over 30% per annum. That's really unusual. So, yeah, we acknowledge the history. You're 100% correct in what you're saying, that we hope that you'll see an improvement going forward. We have another shareholder at the back, please.
Good morning, Mr. Chairman. Is this on? Yes.
Yes, just speak up a little bit, please.
Sally Melick from the Australian Shareholders Association. This is really more a comment rather than a question, but as you know, the Shareholders Association prefers that long-term incentives are paid over a period of greater than 3 years and preferably 5. With the Hayne Royal Commission forcing banks to increase this long-term incentive period, will the board please give consideration to lifting the time period for long-term incentive payments?
Yes, indeed. Thank you for that question. We have actually given it some thought over the last few years, and I'll ask my chair of the People Committee, Tonianne Dwyer, to comment on this a little later on. But we look at all of the comments that have been made by the various proxy advisory firms, by the ASA and by our major shareholders as well, of course. And you know, it's always a bit of a trade-off. We're in a cyclical industry, and you can pick a 7-year term or 6-year term, and it probably doesn't have the value to our employees that the banking industry might have, where it's got very steady earnings and growth in earnings. But I'll just pass over to Tonianne Dwyer to add comment to that.
Thank you, and I acknowledge the view of the Australian Shareholders Association. That view is a view that you express consistently across your organisations, and I acknowledge your thoughts on that. We keep our remuneration framework under constant review. We review it every year. We look to industry benchmarks, we look to what's happening globally, and we look to what it's going to take to retain and motivate our shareholders, not our shareholders, sorry, our staff. At the present time, we feel our settings are about right, and going around the market and talking with all of our major shareholders and our proxy advisors, there's a lot of common ground in where we sit with our current framework. But we do note your views, and as we reflect on our STI and LTI framework over the coming years, we'll take that into account, as well as the views of our other shareholders.
And I might add that the board is, through the Tonianne's committee, is undergoing a major review of the structure of our remuneration practices so that we make sure that they're contemporary with global standards. Are there any other questions? No, thank you then. I now put the resolution to the meeting that the remuneration report contained in the company's 2019 annual report in respect of the financial year ended 31st of March 2019 be adopted. Voting exclusions for this resolution are as set out in the notice of meeting. Please now fill out your blue voting card for resolution 3. Thank you. Resolution 4. The next item of business is approval for grant of performance rights to the Managing Director and CEO, Raj Naran, under the terms of the company's long-term incentive plan. A summary of the LTI plan and the calculation of Raj's proposed grant were set out in the explanatory notes to the notice of meeting. As the Managing Director and CEO of the company, the issue of performance rights for Raj requires approval by an ordinary resolution of shareholders. Approval is sought to make a grant of 123,359 performance rights to Raj in line with the company's long-term incentive plan rules. The shares will vest in July 2022 to the extent the performance hurdles are met. Raj will receive the performance rights and be entitled to the issue of the ordinary shares at no cost to him if, and only if, the performance hurdles are met. No loans will be granted to Raj in relation to participation in the plan, and the non-executive directors strongly support the issue of these performance rights. Details of the proxies received for this resolution are up on the screen, and of the proxies received, 98.7% are for the resolution and 1.3% against the resolution. Are there any questions or discussion on the resolution? If so, please raise your blue or green card now. Okay, no, there are no questions, so thank you. I'll now put the resolution to the meeting. That, for the purposes of the Corporation Act 2001 and ASX listing rules, and for all other purposes, approval is hereby given for the grant of 123,359 performance rights, incorporating the right to acquire shares in the company, to the Managing Director and CEO, Raj Naran, under the company's long-term incentive plan, which is constituted and administered in accordance with the rules of the LTIP, as described in the explanatory notes to the notice of meeting. Voting exclusions for this resolution are also as set out in the notice of meeting. Please now fill in your blue voting card to vote on resolution 4. Thank you. Next item of business is approval of amendment to the Constitution by reinsertion of clause 25. The reasons for seeking this resolution are detailed in the notice of meeting on pages 5 to 7. The proposed amendment is designed to allow shareholders to receive proper value for their shares if a proportional takeover bid is made for the company, by requiring a shareholders' resolution to be passed and approved approving any takeover bid before the shares are sought to be acquired under the takeover being transacted. The reinsertion of clause 25 was last approved at the 2016 AGM and needs to be approved by shareholders every 3 years to remain valid. Details of the proxies received for this resolution are up on the screen. Of the proxies received, approximately 98.3% are for the resolution and 1.7% against. Are there any questions or discussion on the resolution? If so, please raise your blue or green card now. No? Okay, I put the resolution to the meeting that the company's constitution be amended by reinserting clause 25 and any related definitions in the form set out in the explanatory notes accompanying the notice of meeting. Voting exclusions for this resolution are as set out in the notice of meeting. Please now fill out your blue voting card on resolution 5. Thank you. Ladies and gentlemen, the final item of business is consideration of the financial statements and reports. The company's financial statements for the year ended 31st of March 2019, including the director's report and the reports by the auditor, were provided to shareholders in the 2019 annual report. Shareholders are now provided the opportunity to ask questions regarding the financial statements and reports, the operations and management of the company, or questions to the auditor in respect of the audit report. Mr. Simon Goose, representing the company's external auditor, KPMG, is here today to respond to any questions in relation to the conduct of the audit and the preparation and content of the auditor's report. I now invite our CEO, Raj Naran, to join me here at the podium to answer any questions you may have. Again, if you have a question, please raise your blue or green card and wait until a microphone has been handed to you so that all shareholders can hear your questions. Are there any questions? There's one in the middle at the back.
Lawrence Dunn. I was here 2 years ago and I couldn't make it last year. 2 years ago, from memory, you outlined the 5-year plan, and I presume that the result of the last 2 years would be the actual performance of that 3-year plan rather than the last 3 years. Would I be correct?
Yeah, so thank you for your question. The last 2 years' performance are in line with our 5-year plan, so if I had to report on our 5-year plan, at the end of the last fiscal year, we are on plan, and at the end of this fiscal year, we are now on plan. So for the first 2 years of the plan, we are on track to meet our 5-year strategic plan.
Yeah, I just wanted to confirm that was correct.
Yeah.
Because, at that meeting, I observed there that please don't forget the shareholders in relation to what has really been a necessary increase in dividends in relation to the average shareholder. And although I wasn't expecting the results of many years ago, nevertheless it's true, because what I was drawing attention to is turnover in relation to earning money. And that was, I note that all the criteria in the 10-year summaries have increased, except for one issue, and that's the value per the value of assets, which has gone down, and I draw the attention to that, and I realise that you are working on that, otherwise you wouldn't be doing a buyback. And I'd just like you, whether you'd like to both comment on that, those thoughts I just made.
Yeah, look, the decrease in value of assets, I guess that sort of happens when you write off $700 million in the oil and gas division acquisition we made. So we acknowledge that, as the earlier commentary. There's not a lot we can do about it now except look forward and improve the performance. And certainly I believe the performance over the last few years has improved, and the shareholders have had the benefit of that through the dividend increase. But Grant, is there anything else you'd like to add to that?
No, I don't think so.
Okay.
In that case, there are opportunities again to try to endeavour to retain a bit more of the earnings each year to try and improve on that.
Yeah, what we're doing is reinvesting. You know, our policy is on capital management is pretty clear. We pay out 50 to 60% of our underlying net profit to shareholders in terms of dividend, and then our capital is obviously allocated for our stay in business capex. It's equipment updating as well, and then we also allocate capital for growth, and we will continue to do that. If we want to grow shareholders in the dividends in the future, or total shareholder returns, then we've got to keep on that trail.
Only one counter I've got to that particular point. that's long-term growth, and my suggestion is that as a shareholder, I think most of us here would like to have an each-way bet.
Each way bet, okay.
In other words, we'd rather you slow down the growth a bit. Didn't say stop it by
Yeah.
any means.
Right, okay. Well, your point is well
I
taken.
wanted to get my message across like I did 2 years ago,
Okay.
and there it is.
Okay, thank you very much for that. I'm the son of a bookmaker, so I understand each way bets. All right, next question is the gentleman in the black.
Thank you, Mr. Chairman. I need the mic. My name is Norm West. I'm a shareholder from Bendigo in Victoria, which is some direction from here. Congratulations to the company for the increased profit. That's very reassuring. The increase in dividends, thank you very much. I agree with the gentleman here. They will always go down very well. Your safety record is commendable as well, and it's a delight to be with a company with that sort of policy. And lastly, thank you for holding your AGM in the middle of a Victorian winter. It's a very good excuse to come up here. My question, I'll get to it, relates to the on-market buyback that you're currently operating. Could you provide, because I wasn't here when it started, a very brief background and why it is positive to the company to run the buyback in relation to things that you've listed on page 19, gearing ratios, liquidity reserves, and earnings at risk. And a second part to the same question, why is it still positive, and I'm not being critical one way or the other, in a very uncertain global market when a lot of the financial experts are saying cash is king in this particular time?
Right. I'll certainly ask Grant Murdoch, the chair of our audit committee, to answer some of those questions as well. But first and foremost, I'm pleased that Queensland put on some really sunny weather for you, coming up there from Victoria. I came up from Melbourne myself last Friday, and it was very cold down there. You asked, the first part of your question was, why is the buyback good for shareholders? When you have a lot of cash on your balance sheet, it's pretty lazy cash. It's not earning much money, and if you much interest, sorry. And if you don't have the acquisitions to meet your strict criteria for acquisition, for buying various companies, then that cash is better off in the hands of the shareholders. There are a couple of ways of giving that back. You can increase dividend, but once you've got rid of all of your franking credits, and we need some excess cash available for other operations, we turn around and we say, well, if we can buy back our shares at a cheaper price than the value of the shares, that is good for shareholders that remain with the company, for the simple reason it decreases the number of shares out there. When we pay out our 50 to 60% of underlying net profit, your dividend will increase. So that's the simple answer to that one. But Grant, do you want to add further to that?
Look, capital management is something that we have and we consider at every board meeting and every audit committee meeting. What we have to do is balance the current amount of cash we have against the demands coming in the future, both by way of dividend payouts, but also by way of acquisitions. If the acquisitions came along smoothly, it would make it a lot easier for us, but they do tend to come along on a lumpy basis. So it's constantly trying to balance between how much cash we have, what's happening in the economy environment. The other thing, one of the things we constantly have under review is our leverage ratio. Now, our leverage ratio is actually exposed to the exchange rate, and that further complicates our capital management. In that if we have an increasing A dollar to the overseas currencies, then our leverage ratio improves because of the reduced liability we record on our books compared to our earnings. However, if the exchange rate goes against us, then we have to continue to be more prudent. So it's a balancing of all of those things that's required. We hope we get it right, we do our best for it, but I can assure you that it's constantly on our agenda to work out what's the best mix between holding cash, buyback, dividends and acquisitions.
Does that answer your question then? Thank you. A middle at the back, please.
Rod Campbell's my name, Chairman. Chairman, you showed a graph in your presentation which showed the performance of ALS against its competitors over the long term. It's hard to read from up the back here.
Okay.
I just wondered if you could be able to put it up on the screen and somebody show what the various companies are.
We will do that as soon as possible. Okay. Whoop, that was the one back.
So really, the deep blue line, where you look where ALS Limited, that's ALS's.
So dark blue is ALS Limited, the yellow is Intertech,
Is in attack.
the green
Is Europe.
Eurofins, and then the other one's
The
down.
grey is SGS.
SGS is the grey. So they're basically our peer companies, or they're large global tech companies. So the performance, price performance of ALS over that period of time has been pretty good. Okay, thank you. We had a question down the front here, please.
Good morning, Mr Chairman. George Bomber, Director of Faircase. At the last AGM, I questioned the right of the board to receive a pay increase when the company profits had declined in the previous number of years. You stated that the figures I quoted were incorrect, that you would have the company secretary write to me with the correct information. As this has not occurred, is it a case that my figures were correct and the performance had been substandard? I travelled to the company office and spoke to the secretary. Excuse me. I travelled to the company office and spoke to the secretary and presented a plan to benefit all shareholders with the way dividends were paid. As I did not receive any feedback, I rang to speak with the secretary and was told he was travelling overseas with the board. This raises the question: do the board travel economy or business class when they travel overseas and within Australia? Is there a need for the whole board and secretary to travel overseas when there are excellent teleconferencing facilities at head office? I notice on page 49 of the annual report there was 37 million in corporate costs. Was this the cost of executive travel and accommodation? The directors received their bonus on profit improvement even with the profit being below the 2012 result. Does this encourage a decrease in performance for several years to allow a low-cost base to build to give directors a bonus? I noticed in the last financial year that the ASX 200, which is ALS is part of the ASX 200, increased by 6.85%, while ALQ increased by only 0.33%. The board can have an influence on the share price with performance and showing strong positive leadership, both of which are lacking. Corey Ferguson were engaged to advise on directors' fees. Was her advice based on directors' fees paid in Australia or the USA? Thank you.
Thank you, George. There are a lot of questions there, and I'm not sure I'm going to remember all of them. But the first one, I would like our company secretary to respond because you've made some accusations there.
Yes, Mr. Bournemouth, I recall that we, instead of writing to you, I rang and invited you to meet with us, and we did meet, and I attempted to address the questions that you did ask in that response. So, in response to that, I thought that our meeting did cover the issues that you had addressed in your letter. So I apologise for not formally responding to you in written form, but thought that our meeting had covered those issues.
Those issues were not discussed at all. My wife was with me and she will vouch for the fact you did ask me do I need to send this reply to this? And I did not answer in the affirmative.
My apologies, Mr. Bournemouth. If that's the case, I'll take that on board.
Okay then. All right, the next question you want us to address there, please, George.
I did send a proposal to the benefit of all shareholders in the way the dividends were paid, which I've received no feedback from. The Secretary was going to present that to the board.
Yep.
And I've...
Okay, let's just stop there and we'll do them one at a time for you.
We did, in fact, have a discussion about that at a board level in September, George, and the discussion was raised by the CFO at the time. It was an informal discussion, and there was no determination to take that proposal forward.
Okay. I asked whether the board travel economy or business class and why there was a need for the whole board to travel.
I'll answer that one very, very quickly up front. The board will travel business class when it's going over the long hauls like that. Like any other company would do.
Okay, was this the 37 million that was in corporate costs?
No, it was not. But look, corporate costs did increase in the last year, and Raj, I think you probably should comment on that.
Yeah, so corporate costs did, and just to answer you and thank your question on travel, we did not travel $37 million worth of travel in business class. We have a company travel policy that addresses class of travel based on distance and position in the organization. So typically, domestic flights are all economy class travel, and anything over 8 hours, and if you hold a senior position in the company, you get to travel business class. Corporate costs have increased on a year-on-year basis, predominantly to invest in the company in both infrastructure, to build so we can grow the company. So corporate costs increased as it related to software platforms, as we built our finance team, as we built and continued to invest in the company. So, I mean, I guess as a general commentary, I think the corporate costs on a percentage basis are in line with the revenues of the organization. In fact, when we compare our costs relative to our peers, I do believe we underinvest, but we do need to invest in the company so we can grow revenues and dividends for our shareholders.
Can some of that travel be decreased by using the teleconferencing facilities at the...
So we already do. I mean, we've put in video conferencing facilities across the globe, and our auditor's nodding his head here. And we conduct most of our meetings via video conference. We only travel where we feel it's important to travel. The board was asked to travel by the management team. I think it's important for the board to be engaged and aligned with management in terms of looking at our operations. I think ALS is a fantastic Queensland story, and I think when you look at the company, we now truly are a global operation, and it's very important for management that the board understands our operations on a global basis. So the limited travel that has happened happens only on a needed basis. Otherwise, all of us do. We all use video conference, Skype for business. Most of us don't like to get on a plane. We'd rather be going home dinner with our families. So we use technology as much as we can.
As you say, it is a great business, but the profit is still below the 2012 result.
Yes, I can pick a year where it's above as well, and that was probably the top of the commodity cycle, George, and you would know that.
Yeah, but we're 7 years down the track, so I think that, and as I said, that
commodity cycles do move too.
Yep, the directors got their short-term bonus and long-term bonus based on.
Directors don't get long-term bonuses, George.
Well,
or short-term bonuses. Look,
Yep.
One more question, George, then I've got to go to other people,
okay,
please.
Okay. The ASX increased by, 200 increased by 6.85% last financial year, while ALQ increased by only 0.33%. That discounts dividends. If you add dividends in, the variation is much more than that. and you people still get your short-term bonus.
Well, the short-term incentive is, it's the long-term incentive that's around the share price. But the market is what the market is when it comes to share prices. There's lots of buyers and lots of sellers out there. We can't control that. We think the share price is undervalued during that period of time, and we pay out our dividend based on our underlying profit, not on what the market seems to think we're worth. All right, I'm going to move on. There's a question up the back, please, the lady with the microphone.
Sally Malik, Australian Shareholders Association again. First of all, I'd like to join with other shareholders and thank you for another positive year, and it was particularly gratifying to see that net profit after tax exceeded guidance. We did note in the annual report that the auditor raised intangibles as a key audit matter. It would be helpful to shareholders to understand the board's plan for reducing intangibles that are presently shown as assets in the company accounts.
I'll leave this one to Grant Murdoch, the head of the Audit Committee.
Thank you. Under the accounting standards, we really don't want to reduce our intangibles, because if we have to reduce our intangibles, that means we have to impair them because we believe the businesses that they relate to are not going to perform as well as what they have in the past. So I hate to turn the question around, but the intangibles arise when we acquire a business, and that's the difference between the physical assets and the price we paid. We're in a service business, and it's quite normal for there to be a significant amount of what's called goodwill or unidentified intangible assets. They say there is no accounting rule to amortise those over time. In fact, we're not allowed to amortise those, even should we want to. The accounting rules have changed significantly over the last 20 years in terms of how you do account for them. But at the moment, you hold those, you assess them annually against the future prospects of the business they relate to, and it is only if you see a changed circumstances and a deterioration in that business would you actually reduce those intangibles. So we actually, I know it sounds counterintuitive, but we would prefer not to reduce the intangibles, because that means those businesses are not performing as we would hope they would.
Another question up the back.
Norm West from Bendigo. As most shareholders would know, the auditor sits up the front there, desperately waiting for a question.
He doesn't look desperate.
Oh, well, people who wear suits, you've got to watch them. My question relates to goodwill, page 85 in the in the report. It's pointed out that goodwill is important because it's 47% of the company's assets. And I'd just like to concentrate on not on a whole lot, but the second last dot point on the right-hand side. Did the auditor, when they ran through their procedures, find that there were CGUs with higher risks of impairments or even lower risks? In other words, was there a discrepancy between the two? If so, and even if everything else was perfect, what sort of feedback did the auditor give the board to try and get this goodwill or parts of this goodwill off the endangered list, because it's been there for the second year in a row and it looks pretty much like last year?
All right, well, we'll ask the auditor to respond to that. It's his question.
Thanks, Norm. Look, goodwill is an important focus from us from an audit point of view, and that is because it does represent a large amount of the assets of ALS. In terms of your question, we actually highlight what management highlights and the board highlights in the accounts, that there are two CGUs that are sensitive to changes in certain variables, and they are ALS Industrial and ALS Life Sciences South America. Now, what that means is that if you were to change various assumptions, you may get to an impairment stage. Now, we do a lot of testing, as we highlight in our report, around these CGUs and specifically focus on those two risk ones. And we got very comfortable that at this point in time there is no impairment and that management and the board have in place robust plans to achieve an outcome that will ensure no impairment into the future. So at this point in time, there is nothing that causes us concerns with those particular CGUs that may be at risk.
I'd also like to ask the Chair of our Audit Committee just to respond to it as well, please, Grant.
And look, could I refer you to page 59 of the financial report, where we list out, one, all of the different operating units, the goodwill that it relates to, and the two particular units that are considered to be sensitive. The ALS Industrial, it has 149 million, and the valuation is 37 million above that, and it gives a sensitivity for it. And for South America, the goodwill is 56 million, but the calculation of the carrying amount actually comes to 26 million above that amount. So that all the others have significantly more buffers against them than that. But because those two, and there's a sensitivity calculation for you there on it, we review those in detail and robustly test the forecast as well.
And they will be there year in, year out. The whole idea about reporting this is to give shareholders a view as to what divisions are close to their valuation versus others. Okay, next question please. There's one in the middle over this side.
Good morning, my name is Monique Betty. I have a question for Tonianne Dwyer as the Chair of the People Committee. Firstly, I'd like to acknowledge the high levels of positive feedback about the culture and congratulate the board for instilling a confidence in your staff for developing a more productive workplace. As a shareholder, I'm very thankful. My question is about the wider community. I've come to believe that land acknowledgement is a start for action for all Australians. My question is, what do I need to do as a non-Indigenous person to ask the board to include a simple statement of acknowledgement to the traditional landowners?
Tonianne?
Yeah, well, thank you for your question, and I share your sentiments personally. ALS operates globally, and acknowledging that it is founded here in Queensland and in Australia as an Australian company. The subject of Indigenous recognition, I think, is one that all boards are giving thought to at the moment. We work very closely in the communities that we work in right around Australia. Indeed, in a lot of our testing and geochemistry businesses have the opportunity to employ Indigenous people. It's something that our Sustainability Committee is aware of and looks at and is reflected in our sustainability report. I think your challenge is a good one, and I acknowledge it, and we will give it some further thought over the coming year. Thank you.
All right. Okay, any other questions? There's one in the middle down the front here, please.
Brian Mitchell. I've been a shareholder since the soap powder and cuddly days. I'm a simple man with a simple question. You say you've got surplus cash on the balance sheet and you wonder what to do with it, so you're buying back shares. My simple mind says, well, why don't you use that money to pay off some of the debt?
Yeah. It's all that depends of, and I'll get Grant to comment on this one as well. It's all about having an efficient balance sheet. We could pay down the debt, but at these low interest rates, paying down debt isn't as high a priority as giving the money back to the shareholders. Our balance sheet is still pretty conservative, and we've done that on purpose. And we want to have that capability, that conservatism there for acquisitions that we might make in the future as well. But I'll ask Grant to just comment on that as well.
Sure. Look, one of the big learnings of the GFC in 2007 was that credit sometimes isn't available. So I think Bruce, in your presentation, you actually gave the loan profile. So if we were to suddenly pay off debt, then we made an acquisition, we may need to go back out and borrow again, and that isn't as simple as what it first sounds. So it's part of the capital management process in terms of what is the relative cost of the debt, what is the term of the debt, what does our balance sheet look like, can we earn more than what we pay in interest in our businesses, and if that is the case, then what is the surplus? And we do actively look at it in terms of, so I can rest assured we do not want to carry surplus cash to what we need, but the acquisitions, as I mentioned earlier, come forward in a very erratic and lumpy fashion. So it's a question of being able to maintain enough cash to cover off future acquisitions, future deteriorations in the business, and yet not carrying too much, and because that would give us a lazy balance sheet. Does that answer the question? It's a lot of there's a lot of balancing. There's about 5 different things that we balance at each time. So any singular one would point us in one direction, but there's 2 to 3 others going the other way at the same time. Thanks.
All right. Any other questions? Doesn't appear to be. All right, well, thank you, ladies and gentlemen. That completes discussion and voting on the formal business of the meeting. We will now move to collect the poll voting cards, please. For those of you on the webcast, there'll be a short pause while the votes are collected. Ladies and gentlemen, there's no further business to be conducted. The results of the poll voting will be announced to the ASX as soon as possible after this meeting and also be posted on the company's website. I now declare the meeting closed, and in doing so, thank you for your attendance today, including those people attending via the webcast. We now invite shareholders and their representatives to join the board and the senior management team for light refreshments in the room at the rear of the auditorium. Thank you for your attendance.